Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro a little bit firmer, just a tad bit firmer. We did have the address last evening from Trump in regards to the government shutdown. I don't know if how many saw that, but it didn't have as much of an impact. I think some people thought that we might see a big, strong impact with the dollar, and we didn't see anything. If anything, the only thing I think might have moved the dollars if he would have declared that emergency, but that's the only thing that I would think that would have moved it significantly. Although I will say I probably would have expected to see more of a reaction by the time we got to European trading, and we're not seeing that right now here with the let me go on and take a look at the economic data. One moment. Did have German imports data and French consumer confidence, which came in a tad bit lower, which I don't think is much of a surprise. We do have Italian unemployment that just came out pretty much in line. So in the sense, that's a bit of a positive, I would think. Eurozone unemployment comes up at the top of the hour, so almost an hour later. Let's take a look here. Coming into the States, remember with this government shutdown, pretty much limited or no data, so I guess we'll probably have a slew once this comes up. And I don't expect this to be resolved anytime soon because I think Trump's supposed to go visit the wall, and that just shows really more entrenchment. So I really, if they were going to get anything worked out, honestly, I don't think it would happen until about the weekend. So we'll see what comes about after that, but certainly could dig in further. And I think overall it's probably going to hurt the dollar. And we were already looking for some bit of a dollar pullback, although I would have thought at this point the euro probably would have been stronger in light of that. But so in the sense the dollar is still hanging in there, although we expected the momentum to gather lower. Coming into the States, we do have Canadian housing starts at 8:15 Eastern. This clock is set for Central Time where I'm at. And more importantly, we do have the Bank of Canada rate decision at 10 a.m. Eastern. And boy, is the dollar CAD or the Canadian dollar keeping its tone here. Look at that, 32.40. We did get a rally. Remember, we talked about that area we were looking at yesterday from 32.71. That ended up holding, and we did see this market come up in the chat room. I posted that chart. We got back up to that 33.14. It actually got above that to about 33.20, and then the market turned around and started to slide right back down, actually rather quickly. Do have EIO stocks this morning, 10:30 a.m. Eastern. So the key data is going to be, well, the key featured story is going to be the Bank of Canada. Moment. As you mentioned, we'll have Canadian housing starts at 8:15 Eastern. Coming back in here, once again, we do have Eurozone employment rate, and that'll be out at the top of the hour. Well, looking at the dollar CAD, we had talked about this. That was actually our bias chart support yesterday at 32.71. We're actually there at the time, but I thought, you know what, we'd already slipped past this 33.14. I thought this area would hold. It did. We actually got a pop up, but when we started to finally move higher, thinking, okay, well, we're back at that old support zone, which is now going to be resistance. We did pop up here just a hair above 33.20 to about 33.23, and then we just started to quickly slide back down on this market, and we continue to even push even lower. And gold continued to slide back a little bit. We talked about this earlier in the week. I thought we did this over the weekend analysis when we'd already slid back. Thought there's still an opportunity for us to get up to 1,300, and we did go to make that push. But as I said, when the dollar was at its weakest, this is when I thought, okay, gold can really, push above 1,300, and it didn't. It wasn't able to fill the bill, and we set ourselves to going to weaken lower. And weaken lower, we have. Take a look here where we had the. 1278 for our support. Looks like the low for the day was 1279. I think gold actually moved up a little bit higher on the speech, and then it also turned around and gave up a little bit of a disappointment there for itself. Looking here at the cable. Once we got below this 27.56, that opened the door for them to go in and test lower. Let me see what we had for the support here. Obviously, that meant 27.20, not 37.20. Apologies there. But we actually got as low as 27.07. Before making a run just quickly up in here, but we're starting to slide right back lower here. Just actually here at this 27.56, this is actually $57. There we go. And look at the Dalian, still hold up fairly firm here. We talked about this here. And we're just above here, the key level. Once again, we on this break that we saw during the week or this past week. All about this 927. And I would expect this market, they're certainly holding the shorts hostage, had a little bit of a, I wouldn't call it a spinning top. Probably the wick's a little bit too long for a spinning top, and almost there. But trying to still push up this market a little bit higher. Now, once we broke that 927, there we go. Very key area, and in order for us to flip this thing around just to neutralize, we'd have to go and get a close above 927. Certainly don't see that, and I think that any moves towards this area is certainly going to go and be resistance. I'm even surprised here. We're still holding up relatively strong here. Certainly equities have done somewhat better. And boy, what a recovery here. This has certainly aided and abetted the Canadian dollar CAD to the downside, that is. Wow, what a recovery. What a strong recovery. And boy, did we tick up over that $50 after this mark was mercilessly beaten. Look at that. Wow, what a run back. So let's take a look what we stand here on a quick run on the news before we run into the analysis. So the Canadian dollar notches a one-month high as investors bet on a trade deal. The Canadian dollar strengthened to a one-month high against the greenback on Tuesday as hopes of a trade deal between the U.S. and China boosted investor sentiment ahead of an interest rate decision from the Bank of Canada. Stocks and the price of oil rallied on bets of the world's two largest economies would strike a deal to end a trade war. The CAD is looking a bit better overall at this point, and it can perhaps improve a bit more, said Sean Osborne. Bank of Canada, which hiked interest rates 3 times in 2018 to leave its benchmark rate at 1.75%, is expected to refrain from tightening further on Wednesday after it worried last month that a sharp drop in oil prices since October could hurt the Canadian economy. Data on Tuesday from the Statistics Office showed that the country's trade deficit is more than doubled in November to $2.06 billion as exports declined for a fourth straight month, dragged down by a weak prices with crude oil. So you kind of think about it that this, the dollar CAD, boy, the thing is, or even the Canadian currency has really pushed everything for what it's worth. And moving on to the Australian dollar, the Australian New Zealand dollars consolidated recent gains on Tuesday's investors anxiously wait to hear if any real progress is being made at Sino-U.S. trade talks in Beijing. U.S. Commerce Secretary Wilbur Ross predicted on Monday that Beijing and Washington could reach a trade deal that we could live with as dozens of officials resumed talks. The talks were supposed to be between the mid-tier bureaucrats with the appearance of one of China's most senior officials to the trade war. We could have a breakthrough leading to a rally in the Aussie and the Kiwi. The Aussie was taking a breather at 71.34 after running out of a puff at 71.50. The miss was largely because of imports of capital and consumer goods and enjoyed a second month of surprising strength, suggesting domestic demand was looking up. Exports to China also hit a record high of $11.1 billion, a rise of almost 41% from a year earlier, and evidence of Sino-U.S. trade dispute had yet to bite. But trade tensions are incurred in a time when the growth outlook is softening in both economies, noted NCBA economist Belinda Allen. And let's go and move on to the latest dollar news, and then we'll finish up with gold. Commodity-linked currencies such as the Aussie dollar and the Canadian dollar rose on Wednesday, helped by a rise in oil prices and growing optimism that China and the U.S. may be inching towards that trade deal. News that the two sides agreed to extend talks in Beijing for an unscheduled third day on Wednesday boosted oil prices. Markets are finding comfort in the fact that the trade level of WTI futures has shifted above $50 a barrel, said Yukio Ishizuki. Commodity-based currencies are performing strongly as a result. Noted that the WTI futures had tried but were not able to cross a psychologically important level during the previous trading session. The rally in riskier assets accelerated since last Friday when Fed Chairman Jerome Powell said he was aware of the risks of the economy. The market became too pessimistic about the global economy up to the beginning of the year, but it seems the kind of pessimism is fading, said Mizuho Securities. The dollar index, which measures the greenback against a basket of peers, edged 1/10. And the yen, the dollar gained 0.1% to 8.84. An unexpected fall in German industrial output for the third straight month weighed on the euro, ending the previous session. The drop was modest, but it underscored concerns about a slowdown in European central banks. Caution it tries to wean the region off stimulus. The British pound was at 27.40. Obviously, we've moved higher than that. Traders expect sterling to remain volatile over the next few weeks due to Brexit votes. I think there'll be another drama. Uncertainty dominates again over sterling. It will face downward pressure, and the euro will suffer as well, said Mizuho Yamamoto. The British Parliament is due to vote on Prime Minister Theresa May's Brexit agreement on January the 15th, and the run-up is likely to dominate trade in sterling. May is set to lose the vote unless she can convince opponents within and outside the party to back her deal. And lastly, with gold, gold edges lower on improved risk appetite. Gold prices edged lower on Wednesday as likely into a long-drawn Sino-U.S. trade war boosted risk sentiment. In the short term, there's some optimism, but there will be a trade truce which will take away a shadow from the market confidence. However, gold is seeing some headwind because of a gradual recovery in risk assets, as well as investors pricing the Fed's dovish signals. The rally in riskier assets has accelerated since last Friday, and with the Fed certainly indicating they like to be receptive to developments in financial markets. There's clear emerging consensus that there may not be any rate hikes, and it could be a tailwind for gold. But ETF flows are still not bounding on the sovereign foot. There are lots of central banks buying gold. Once we see a momentum on the ETF front, that'll be an inflection point for gold to move up. Sizing up the technical picture, a top may be taking shape in gold, already said Ilya Spivak, currency strategist at Daily FX. The recent rally appears to be investor-led rather than reflecting a further significant tightening in fundamentals. I would agree on the investor rally because remember, that's one of the things we've been talking about over the last month and a half, that we were surprised that gold had not moved higher in light of all the volatility we'd seen in markets, and we thought there would be a shift in just general buying as people say, you know what, I'll put a little bit of money in gold. So yeah, that I would agree with, but we'll see what happens. I think that gold is still holding up relatively well. It could be a whole lot lower, but we'll see what happens, especially if the dollar fades. Gold may have a little bit of a tough time losing if the dollar starts to fade, but we'll see how that plays out. Let's go on and move into the charts. Well, when it comes to the euro, I don't think anything's changed here with this 115. That is key. Let's go move into the euro. Now, in order for us to move higher, we started to get this. We saw that earlier, previously, when we got that. I think that was on Monday. We got that daily close just above this key 1470 area here. But the market started to slide back, and we're just hanging around here. If we can reclaim 1470 on a daily, especially if we can close above 14, you can see right here, 1476, I think that could really open the door for us to just push higher. So let's say tomorrow, whether it's today or tomorrow, we were to close, let's say at 1480-ish. I'm not saying we can't move much higher. That would really open the door for Friday, really, for us to go in and bust loose. But once again, we'll have to wait until that actually happens here. Really, with the speech, I would have thought that even with that, the euro would have probably found itself a bit stronger here. Probably would have been pressing the upside. So really open for us to maybe edge back a bit, even though I think the euro's technical picture from the upside on a short-term basis really looks constructive. And I would look for the dollar to once again pull back. Let's go on and move into the 2-hour. And you can see here how important 115 is on the 2-hour right there. And that's what we're going to have to go and get above. And until we take it up, that's the key resistance. Now on a daily, and we really do need to get above that 1475 on a daily. But for right now, intraday, it's still going to be all about 115 until we can get beyond that. You can find some short-term support at 1440, but the market's acting a little bit tired up in here. Certainly still constructive, and as I mentioned, I think there's an opportunity we could finish the week up strong as maybe bears start to give in. But it's not to be held yet, and I think if bears have anything to hang their hat on, is that post that Trump address to the nation. I think that we could, I'm surprised. I thought the euro might have been coming at the European session, probably would have been around 1490, really, getting ready to blow the lid. And the fact that we're still holding, we're still holding okay, but it probably has to be a little bit disappointing for bulls. I mean, we're still above was still above, the 1440, even 1450, but I would have expected us to be would push to higher. So in light of that, like I said, I think the door is open for us to move a little bit lower. And if so, we could really start to push momentum. And that, I think we're going to have to list 1416 as a support here at this point. If that does happen. Cable has been able to go on and get above or maintain its upside bent. Once we got past, we were able to reclaim this 2716, and that's allowed for us to push higher. But we still haven't filled the bill yet on this. I think we had is 2788 or 2789 here. Yeah, 2788. Still have not been able to get above that in a key significant way. We'll move into the 2-hour. Just hanging on a thread to 2756. Right there, we have not been able to go and get above that. And that continues to remain the resistance level until we get past that. It's 2788. Coming right across here and holding the market up. I mean, hold it, as far as being able to get beyond that 2788, holding up very well. On the downside that we had marked off here, which obviously meant to be 2720, so apologies on that, but we did get down here to 2706. It's going to be 2698. That's really going to work like a trigger. If we get beyond that, it's really going to open the door for us to go on and move much further lower. But we'll go on and put that could be for 2698 for the support. We also continues its march on a very strong recovery, and looking on everything's all about these, U.S.-Sino trade talks, and for good reason. And we're just above this key level, the 71.42. Confluence was 71.46 to 61%. All about these trade talks, and we talked about that last week. I'm still surprised we're still holding at these levels, though. But obviously, something like that is really going to allow them to push even higher. They're just waiting to hear something constructive, and then they thought that they pushed the talks an additional day that was not scheduled. Certainly has the market, ready or looking for this to go on and potentially push up a little bit higher on what they expect to be good news. We did take a dip down yesterday to about the 71.15-ish area before the market turned around and started to recover back again. Looking at resistance at this point. Well, we just got there right here. You see that coming across. 71, 71, and we're not even that far away from it. If we do get the news, you have to look at where the resistance is just above here, which is going to be 71.98. If we do get that push to good news on these talks. And support really comes down at that area where they actually started to break a little bit above that 71.14. That's where they came down a little bit lower yesterday, and what was in resistance then became support. Right there, 71.16. We'll call it 71.14. And until then, we're just being held hostage to a certain extent with the trade talks between the U.S. and China. Let's go and move into the Kiwi. It's a very tight range that we had in here at 02 and 66. For right now, this is holding them in check a bit here. But if we do get that news, which it's not that much higher, but it was actually be here at 67.74. So we'll just adjust for that on the daily. There's that 67.66. And support will be right there at 67.14. Nothing really developing. The market is just trading very quiet. So once again, if we do see a bit of a disappointment, then initially on first blush would be the 67.14 for support. And let's move to what's going to potentially be the big mover, or the big, let's just say the big story for the day. This really tilted things down, or actually, garnered even further momentum beyond when we started to get beyond this 33.56. And really, when the market started pushing it, it was like, this is not going to go on hold. The market is going to really want to push even further. And I'm even surprised we've even come this low, but low we have. And there's some support coming right there. And we've even dipped below that, which is right there, 32.46. As we've mentioned, this has been a bit of an area good, support level here, this 33.14, that confluence with the 38%. When we got below that, as we came into the European crossover, we're actually yesterday at 32.71. That was right there. We were right there, and that was going to be our day support. And we did see the market go on hold here. And then from there, we made a run right back up to the 33.14 area here. And that's where we actually ran out of gas. I mean, we actually got up to about 33.23, but we started to slide right back and quickly lose momentum here. Today's the Bank of Canada rate decision. I'm not really expecting any for them to go and make any steps to raise, but I think we could see the market probably ease back a little bit. And only thing is that what's helping this once again is those senior-U.S. trade talks. If for some reason those, and I do not expect them not to have something positive come out of that, but we might see a bit of a little counter rally. Obviously, something that would be definitely sold into. Resistance for right now is going to be 33.33 on a short-term basis. 33.33. This market has gotten so weak. I think we're so overdone at this point. Yeah, it's we got here at this 33.14, and that's actually as it broke lower became resistance. The market got up above it, dipped back. Hard to think. Here we are, almost 100 pips lower for what we're looking at for the next level of support. And if you look on a daily, there's a potential for us to go to 31.85, but we've already lost quite a bit already. We're actually going to be looking here at this 32.12. 32.12. Yesterday, after we found that support there, we started moving higher, and we actually flipped on a short-term basis to a buy mode here on the Canadian dollar, only to see it roll back over. When you see that happen, generally you see an even greater pressure to the downside, which they did go on, not only get past this test the 32.71, but even push even lower for almost another 50 pips lower. And moving into the dollar Swiss. This market is just hanging on by a thread here at this bias pivot, which comes in right there at 98.02. We're still holding, but we're just barely hanging on by a thread, as they say. Let's go move into the 2-hour chart. I'm not going to see that we're going to see anything necessarily on the 2-hour. I think we did have our support yesterday at 97.76, and that's going to remain the same. We had our support here at 98.38. We did make it up as high as 98.34. I guess almost 98.35. But the market's still having a tough time and trading in a relatively tight range. Don't really see anything changing there either. To me, this market looks like dead money for now, unless we can go in and break lower. We just may, the dollar may start to lose some of its momentum, further. But we'll keep it there at 98.38. So no changes here in the dollar Swiss for today. Now, we did go on and take a look earlier at the Dalian. This is a bit surprising, but I think that's been able to retain this upside, but obviously things have improved here somewhat. You look how much they're squeezing here on this S&P. So that certainly has kept the bid up, and obviously the reason it's kept that bid up is the Sino-U.S. trade talks, them extending an additional unscheduled day has certainly kept the bid on here. But once we get past that, hard to make the case that the Dalian would turn around now. That being said, we would have to get above this 927. We're actually going to mark this. I think it's important enough to mark this as a pivot. In order to really negate this, we would have to get above 927. Now, that being said, let's say we get some very good news out of the U.S.-China talks, and if they do, Trump's going to be, that was one of the reasons I kept thinking, hey, they're going to get something done because the administration is desperate to get something done that can, deflect some of the other issues that they're dealing with. And especially also as weak as equities have been, they need something to really hang their hat on. So despite how the deal comes out, I think there'll be something at the very least constructive. But I think the administration is really going to, more so Trump, is going to pump it up for all it's worth. And it's the greatest deal that ever happened, blah, blah. There's a new day. The sun's coming up. Everything's bright and shiny, so you could see this try and push further, and obviously with the shorts certainly in a difficult situation now with the recovery that we've seen in the S&Ps, we could really try and move this a lot higher. Potentially, that resistance would come in around 2635-ish right here. Maybe you could even push up here to 2647, but at least initially it would be right there. 2633. So this market on some good news and probably pushing the rhetoric for all it's worth, really could go on and push this thing up closer to around 2640. If that's the case, we could find ourselves in a situation where the Dalian could really put a squeeze on some shorts. Now we have some shorts. I think Blake had mentioned that really a lot of big funds were looking at this is the trade to be in. So one thing about that, those people aren't going to get spooked that easily out of their positions. And really what's going on with Sino-U.S. trade talks, certainly if we do get a deal, and I think they'll play it up well beyond for what the real value of that is, we could really push this up high. And maybe for one day we would close above the 927, but it would take that close. And now I would probably say in light of that, we probably would have to say we'd have to see 2 consecutive daily closes above 927, because really on something like that, they could push it if they want for all it's worth right up to here, 973. But 927 is going to remain key for right now. Actually, I don't even think we even had it at 927 earlier. Let's see here. Just for starters, we'll say 952. And really 957 was at 50%. So we'll go with 952 on a little bit of a stretch, on some good news out of the China trade talks. And the administration really pumps it up for everything it's worth. So let's go with 952, a little bit of stretch. We did have the 927. It was a pivot. It is a pivot. But we're going to give it a little bit of extra juice here in case we're to see that. And I would go on and say that looking at this 952, I mean, I apologize, 929. At this point, because if we do get that news for U.S. trade talks, I could see the administration trying to pump this out for Friday morning. So we could even see it stretching a little bit beyond, maybe as late as Friday morning. But really, we could see this market close above it. The real deal would be, I think, it's going to have to be, you have to have 2 consecutive days. So we could even see this market push up above the 927, 35 or 40 pips, and then ultimately start the week to start to lose it. And then we start to try and slowly work our way lower. But I think that we could see this thing push up to about the 950-ish area right here, maybe even a little bit as high as 973. But I think a lot of big players that are going to be short, they're not going to get knocked out of this thing very easily. For some short-term players, certainly that would be the case. Now, as far as downside, let's go and take a look at that. We'll actually go and move into the 2-hour. There we go. It's going to be 855 here. But you can see they're stretching it for all it's worth. And there's that 946. I'm actually going to mark this off here. Let's go move into the dollar index. We're just hanging on by a thread of this key 95.65. That was that level we touched from the prior week that the market successfully defended. One of the things we talked about is that how the markets start to lose momentum, how the market been, and for good reason, bulls were really long this market and kept defending it. But we thought on this last move, over the last course of the 3.5 weeks or so, how the bulls have started to rein in their positions, really opened the door for allow us to come lower, and we did. We certainly saw that last week. And I thought on the recovery here, that was on lighter bullish volume as this the market was going to move up, but basically, as they say, driving on fumes and open the door for the dollar to move lower. the dollar's actually held up better than I would have thought that at this point we would have pushed lower. That being said, probably defending a little bit with those good Sino-US trade talks that they expect. But once we get beyond that, I think that really the market has the opportunity to start to move lower beyond that. One of the things that's holding us up is, once again, the strength that we're seeing in the S&Ps. I think once we get past that, looking for that, we may start to see U.S. equities start to slow down. The thought being is that we may see the economy slow down. Now, that being said, we did have a strong NFP report. So, probably some people in the market are thinking, hey, wait a minute, not so fast. You get a strong report like that, how are you going to get a market, how are you going to get an economy to slow down? Very good case in point. So probably what's holding the market up, I wouldn't say levitating it, but holding it from breaking lower. Obviously, this big up move we've seen in the S&Ps, we'll see that move extended even further, a bit further, once we get those the result of those China trade talks, which I think are going to be reflected as positive and probably even blown a bit out of proportion to how positive they are. Once we get past a few days to digest that, then we'll probably start to see the equity start to weaken. But once again, I don't think the bottom's going to come out when you get a strong employment report like we saw. So market to slow, economy to slow down, yes, going to slow down quite a bit, maybe not so much. And obviously the move lower we saw in crude all the time makes it also cheaper for the consumer. But once again, the government slowdown has certainly had its impact. So there's cases to be made on both sides. But I think eventually we'll see this dollar start to recede, but still holding up fairly well. Once again, like I said, maybe on Friday we'll finally start to see this thing going and break lower. But for right now, the key support target would be on a shorter term basis is going to be that 95.38 we're looking at here. From there we could see a bounce. That we might even visit that by Friday. We shall see. On the upside when it comes to the dollar, nothing's changed for right now. It's going to be 96.08. So this is going to be steady Eddie on the dollar index. So it'll be 96.08, so no changes there. And let's go and move into gold. Yeah, I thought we had the opportunity, on Friday, but obviously, funny thing happened on the way to the Palladium, which is that strong jobs report. I thought we had the opportunity, had it not been for the strong jobs report, for us to get beyond 13 and probably get up as high, not much, but pop up to around 1304. We did make, but when the market dipped back, I think people were quick to sell it. But I thought when we looked at the analysis over the weekend, we still saw the door was still open for a challenge at 13. So we saw this market smartly come back. Actually looked like they were going to press higher as they started to tick up towards 1296, just to spit away from the highs. But we lost momentum. One of the reasons we lost momentum, we already addressed that. Man, when the dollar was at its weakest and the euro was over here pushing higher, this was the opportunity for gold to really blow some stops. With that being said, look how far we've come with gold. Now, I thought that should have been expected in light of the volatility we were seeing in equities, and I'm surprised it didn't materialize into even greater moves and even much sooner. I agree with the story that a lot of this they were saying, hey, once we get a bigger move in the ETFs, that's when we'll start to see this market play out. They were thinking this is more of an investment move, and I believe that's the case. That's what we were talking about over the last 6 or 7 weeks. That I thought, hey, I think we're going to have a good undertone bid for gold, because I think investors are going to start to move a little bit of their money into gold, and in regards to the volatility we'd seen in the equities. And so I think that provided that nice undertone bid, which moved the market up higher. That being said, apparently it wasn't enough to really blast it, but this has been a pretty good move here, almost all the way to 1300. That being said, I think the market's going to have a tough time trying to roll over because I think we do have a little bit of investor demand. I think that once you make a move down here, you're going to start to see that shift in ETFs. And don't forget, when you look at it here, how long do you think this is going to, move higher? My guess is if we do get that news with China talks and the administration, pushes it, makes it sound like the greatest thing since sliced bread. Well, we're going to get a push up here because certainly they've got shorts with their feet to the fire. But once we make a move up in this area, we're probably going to start to rotate back lower, which probably take us down to maybe just sub 25. Well, with that, if you look at where gold will be at that point, I would think if we do go and get a bit of a pullback, let's say we come back down to about 1250-ish, okay? Probably around this 1259, you're going to start to see some pretty decent demand. Well, then you're going to start to see this come right back in, which maybe at that point, we'll start to see ETFs, we'll start to see some real movement there, and we'll start pushing higher. And I think even Blake was saying I think he was looking around for 1400 potentially. I think longer term, he was saying he was a gold bull. I just think that when you look at that, with the volatility we've seen in equities and the push, I'm surprised, like I said, that we didn't even make a move much sooner and much higher, which probably would have got the market going all bananas if we'd gotten up to around 1325. But I think that will be in the cards, over the next, month and a half or so. I think that when we come back down, the market's going to reload itself and we'll start to move a little bit higher. I don't think it's going to go bananas to the upside immediately, but I think we'll start pushing higher. And then before you know it, you're going to have the technicals moving with it and some thought, hey, we've got the investors there, but we're going to really start to see some real demand on the ETFs, and then the market's going to be ready to go and push higher. So I think if we do pull back, I think it's only going to be a minor pullback, and at best, probably going to see a lot of buying come in around this mid 1240-ish area if they're able to test that low. I don't think it's going to. So that being said, we had yesterday's 1279. Let's take a look at it here on the 2-hour. Obviously, spend a little bit extra time giving my 2 cents on gold. We had 1278. Obviously, the news in China is going to take a little bit of the luster off the gold market as people say, oh, well, now they're back into risk assets. So this is a bit of a stretch for today, but so that nobody's caught with their pants down, let's go with 1273 right here. 12 right there. 1272-ish 3 right here. This is pushing it because that 1278 is okay, but I think that if we do get that news out of China or U.S. trade talks, it'll probably allow this gold to push back a little bit further. We'll go with 1273. If you look on the daily, there's that key level where we had the pivot 1267. This is where the market could potentially come down to, but I think that's a bit of a stretch right here. I think really, if you do see this, this is a great area for the market to bounce off of. If we were to come as low as 1267, I would want to definitely be a buyer right there on this pullback if we saw like a little bit of a scare move, which would be, like I said, at that point, about a $14 move lower. Looking on the upside, it's going to be right there at 1288. 1288. Right there, already there. Let's take a look at the 30-year bond. We have come in a bit. 30 bonds are still holding up relatively well. Yeah, you look at how high it ran up, but overall still holding up when you think of it in light of where the equities have come back to. So we're going to go right there, 4506. With resistance coming in right there at 4611. And on to the bunds. Well, there's that 6305, so that's holding up very well. And well, until it breaks it, we're going to just keep it right there at 6305 with resistance coming in right here. 6341. And let's go and move on to the DAX. Boy, what a recovery we've had here. Another stalwart recovery. Certainly with this move that we've seen in U.S. equities, it certainly provided an opportunity for the bulls to push it for all it's worth. And right there, 975. Actually, technically, it's 972. Well, potentially this is where they get to if we get that big hullabaloo with the China talks. For right now, we'll call it 972 on the upside. We just go support right there at 824. And there's a bias chart for today. And we're basically right up here at the top of the hour. And actually do have European employment coming up. And see if there's any other news that's popping up right now. Fitch saying the U.S. debt ceiling is more important than the shutdown for the U.S. rating. That's coming from Fitch. Could ultimately impact the dollar. Thank you very much for joining us here on the European crossover. I'll go and get this posted in the room and have a good luck trading today.